Hey everybody, Chuck Barone. It is Tuesday, November the 21st, 2023. Counting down the days till Turkey Day. We got a big holiday coming up this week. Market's going to be kind of a weird week because it's such a short week with a day in the middle of the week off and a short day on Friday, and truthfully, for the most part, a short day tomorrow too. I remember when I worked at Lehman, the day before Thanksgiving, the second the market closed, it was literally a stampede out the door. I'm sure it'll be the way it is tomorrow on Wall Street as well. Markets today, they had a little bit of a give back after rallying up a little bit. Not a lot of good news in the economy today, but the market's kind of hanging in there. Stocks coming down a little bit, but just a little bit of a give back after a nice rally for a couple of days. Dow down 62 points today, sitting at 35,088 points. NASDAQ comes down 84 points. It's 14,199 on the NASDAQ. And the S&P comes down 9 points. 4,538 on the S&P. So you got, these are pretty good levels for these indexes. I think, the market altogether is pretty healthy, all things considered. You kind of consider we had 2 consecutive quarters of negative GDP last year. We rallied back and GDP ended up rising for the year, even though we kind of all believe we were in the middle of a recession. So the markets had that whipsaw, earnings surprises, uncertainty with the Federal Reserve, all kinds of crazy geopolitical stuff, oil zigzagging all over the place. So the stock market has had a lot to digest and is still holding up pretty good. So go figure. The bond market today, kind of a nice quiet day in the bond market for a change. Bond prices aren't whipsawing around for a change today. It's kind of quiet. The 10-year finishing unchanged. Ooh, amazing, right? 4.42% for the 10-year. The 2-year coming down 3 basis points, so a small rally in the 2 years. 4.88%. So there you have it. The bond market, a nice quiet day. Tomorrow is going to be interesting because we're going to get jobs tomorrow. We'll see if that number, surprises in any way, if it has any effect on this bond market. But it will be nice to see this bond market kind of settle down. Toward the end of the show, we'll talk a little bit about some of the numbers we've seen in the bond market. It's crazy stuff, guys. Dollar today, not much happening in the dollar, up fractionally, sitting at 103.60 on the index. I think it was up like 12 basis points. The dollar is still a strong number, but not nearly as high as it's been. Even though it rallied up a little bit today, the dollar is still kind of down. I think it peaked out around 114 or 115. Was recently as high as just a little over 106. Now coming down. Anything above 100 is a strong number, but again, coming down from 114, 106, whatever, it doesn't look quite as good. So we'll see where the dollar goes. There's really not much competition as far as foreign currencies go. And this is just a reflection of the markets believing that the Fed is done raising rates. As a result, higher rates would strengthen the dollar. I think they had some of that priced in. Now they're getting rid of that and correcting. Even though the dollar up a little bit today, gold and silver had a nice day. The day I was expecting yesterday, honestly. Gold jumps today, $19.90. Now sitting at $1,997.50 for an ounce of gold. Looks like it's getting ready to go back above 2,000 here. Not a surprise to anybody listening to this show. We've been saying that for a while now. Silver rallies 33 cents. Sitting at $23.74. I got a feeling it won't be long. You're going to see that $2,000 gold. You're going to see $25 silver, which is honestly cheap. Should be higher. Those milestones will get knocked over, and it won't be long. I'll be looking back at those numbers like the good old days. As this dollar comes back down to earth, gold and silver are going to have some good times. Oil today, basically a flat day in oil. coming down just 1 cent per barrel, sitting at $77.82 for a barrel of West Texas Intermediate. I'm telling you guys, it wants to trade between 70 and 75. I'd bet my bottom dollar it'll get back in that trough before long. Looks like this little bit of a rally is losing steam pretty quickly. We'll see where it goes tomorrow. Bitcoin today falls $388, sitting at $37,011 for Bitcoin. Some news in the crypto markets today. This Binance chairman, Chinese national, I believe, pled guilty today, money laundering, all kind of fun charges. Agreed to pay, he's going to end up in prison, also agreed to pay a $50 million fine. $50 million. The company, Binance, agrees to pay $4.3 billion in fines and penalties for the behavior. How much money are they making, guys? Wow, this company has not been around very long, and it certainly hasn't been profitable for very long. Gigantic numbers. Imagine what the numbers are going to be with FTX, which had just a massive fraud and blew the whole thing up. Binance is still going. It still exists. And they're saying that this company, that's why the company agreed to such a big penalty. They're saying that by paying that penalty, it looks like if they can pay it, Binance will survive and continue to at least be alive in the market, in business. So that was interesting. Fed minutes come out today. Really interesting stuff, guys. The Fed releasing their minutes from their last FOMC meeting. It shows the Fed right now, in spite of what the market believes, has no appetite at all for rate cuts. The discussion showed that officials want a quote-unquote restrictive policy until they got ironclad proof that inflation is back down to the target, or at least going to hit target. 2% is the number. We're at 3.2 on CPI, higher on core. We aren't there yet. Now, Powell's comment after the meeting, before these minutes were released, he said that, quote, we aren't there yet. Okay, no, he said, we aren't even thinking about rate cuts right now at all, unquote. So, this and the minutes from the meeting reflect that attitude pretty much all the way around the table. The governors are going to be very cautious. I think that they don't want to be declaring victory too soon, and then something bad happens and they look like a bunch of donkeys. They want to at least look competent, even if they aren't. But I tell you guys, as soon as the Fed signals they're done with rate hikes, they don't keep that little bit of uncertainty in the market. As soon as they signal cuts are coming, man, you are going to see a gigantic, explosive rally in the stock and bond market. It's going to go crazy, man. I mean, it's going to really be something. Now, the futures market and the Fed futures showing virtually 0% chance of any further rate hikes this year. Also showing 4 quarter-point rate cuts next year, starting in May. I think that might be a little optimistic. That presumes we will not have any type of setback at all in this inflation fight. And I have to say that I have my doubts about that. These things just tend to not go in a straight line. There's always surprises. I think that the idea that this fight is going to be won so easily, maybe it can. I just, again, have my doubts. I'm going to have to see it with my eyes rather than believe it with my ears. We talked about deflation. Funny, the comments. A lot of you guys out there would welcome some deflation. I was reading an article today that said not only do Americans want the inflation number down as close to zero as possible, but the American public literally wants a rollback of the price increases we've seen over the last couple of years with inflation. People believing everything is just way overpriced right now. And I'm telling you, sooner or later, you're going to see a revolt where consumers are just going to start shutting down this super expensive stuff. That'll probably be a little closer to the recession if we get one. Quick real estate notes today, guys. Interesting stuff. I was telling you guys we're going to get existing home sales info today, and we're going to come in crappy. They did. The truth with existing home sales is there's no existing homes for sale. So we knew this number was going to be horrifying. It was the lowest reading for existing home sales since 2010. Since the big kablooey, man, when nobody was buying houses. Houses in Vegas at that time cratered out and ended up at a median price. Get this, guys. I think it was about 2011 or into 2012 when they finally actually hit all the way to the bottom. Median price at the bottom in Las Vegas, $112,000. 2012. 10 years later, median price, $450,000. Real estate, big returns in real estate. Another little piece of that article I read that right now, out of all the homeowners in America, 40% of those homeowners own their houses free and clear. Own those houses outright, no mortgage payments. Of course, you still got to pay taxes and insurance. There's no zeros there. But not having a mortgage is the highest percentage of home ownership, debt-free home ownership, mortgage-free home ownership ever. So it's pretty cool. I've been telling you guys this stuff is possible. Owning your home outright, not having to pay rent, not having to pay a mortgage is a huge financial benefit. It frees up probably the biggest bill you have every month. Imagine not having to pay that. How much cash would that free up for you, man? It's a lot. So 40% free and clear. And this bond market ride, guys, I was reading some stuff. Listen to this. So today, we had $15 billion in 10-year tips. These are the inflation-adjusted treasuries, right? Inflation protected. $15 billion today. It seems like every day it's $10 billion. It's just totally bananas, man. Now the market thinks that inflation's done. So on these tips, they're demanding a higher yield because they're not seeing the yield rising with high inflation numbers, right? So and listen to this, man, primary dealers on these treasuries, that used to be a cake position on Wall Street. If you were a primary treasury dealer, you're going to make massive dollars. Primary dealers had to eat 13.6% of this offering, couldn't sell it. The typical average is between 6 and 7%. They're typically undersubscribed. You'll sell those bonds off pretty easily, but doubling 13.6%, not good, right? Now listen to this. Earlier this year, the stock market lost 3.3%. Okay, with rates going up, of course, you're going to suffer some losses. But with this big rally we've seen since the market started to believe the Fed was finished, now we're back to even. They've rallied and regained all of those losses for this year. Treasuries lost 2.3% in 2021. They lost 12.5% in 2022. Those are huge hits for the bond market, man. The bond market is not supposed to behave like that. It's supposed to be pretty much quiet, right? Rate hikes, the Fed raising so many times, crushed existing bonds. Listen to this. Long-term bonds, long-term treasuries, between 2020 and last month, had losses of 46% of the face value. You got to give up face value to raise that yield back up, right? Would you imagine you're buying treasuries, you think you got the safest investment on planet Earth? And it is if you hold it to maturity. You're guaranteed to get your principal back. You better just hope you don't need the money before then with a 46% haircut. The bond market up 2.8% just this month alone. Now, I got to tell you guys, this is not normal behavior for bonds. They're usually very quiet. It's kind of like watching grass grow or paint dry or whatever cliche. So it's just been wild. All the old people flock to the bond market for safety and security. I hope they're having fun, man. Anyway, that's it for the day, guys. We appreciate your support. As always, If you can, please hit the like button. It changes things around, changes the algorithms around, gets us a few more views. We would appreciate that. I will be on in the comments today if you got questions, comments, just a happy Thanksgiving. I'll be on, with you guys. Let's have a little banter, have some fun. We'll be back tomorrow to bring you the news you need. As always, guys, we appreciate your support. Until tomorrow, take care. Thanks.